for $0.2 billion. That is the size of the deal on your screen at 3 in the morning. It is not your money. You will never own a dollar of it. You are simply the one who builds the model that makes it happen, cell by cell, assumption by assumption. This is every level of an investment banker, from the analyst who never sleeps to the people who move markets before the news even breaks. 43rd floor, a bank whose name is on the building. It is 2 in the morning and the pitch book is due at 6. You have been awake for 20 hours. Your Bloomberg terminal hums. Your coffee is cold. This is the bottom. First year analyst. $150,000 to build models and format slides. Thousands of them. You do not pitch clients. You do not close deals. You are not a banker yet. You are a function. You produce decks, comps, and memos, and your 20s run out one all-nighter at a time. Your VP flags a number on slide 34. The discount rate is too aggressive. You rebuild the model. You move it 50 basis points, and the valuation shifts by $400 million with a single keystroke. You start to understand, on a cellular level, how much of value is just a story told with a straight face. Somewhere above you, a managing director you have met exactly twice makes $4 million a year. He does not know your name. You tell yourself this is the foundation, that the work is building something. You are right. It is also costing you your sleep, your relationships, and 30% of your 20s. You learn to live in 6-minute increments. Every call, every email a fraction of a billable hour. You stop asking what your time is worth. The bank already decided, and it is renting your 20s by the slide. You get promoted. The title changes. The hours do not. Now you sit on the client calls. You don't talk. You take notes. You hear the CFO of a $6 billion company ask about debt options, and your MD walks them into a high-yield issuance on punishing terms. You say nothing. You're learning how the money actually moves. And you learn the first real rule. A deal is never just about the numbers. It is about relationships, leverage, and timing. And your MD controls all three. You control the model. The trust that moves billions was built 15 years ago on a trading floor, over a dinner you were not invited to. You close your first deal, a $340 million refinancing. Your name is not in the press release. Your MD's is. You get a $15,000 spot bonus and a handshake. You tell yourself this is normal. You're almost right. You begin to see the bank for what it is. The deal flow is not random. It never was. It is a machine for converting access into fees and proximity to capital into power. You're still outside the room where it is decided, but now you can see the door. 31 years old. You run the deal day to day now. 2 analysts report to you, and you know exactly what their nights look like because they were yours. You manage the process, the client, the all-nighters. You are the engine of the deal, but you are not yet the reason it exists. This year you make one quiet compromise. Nothing illegal, a gray zone. You know the acquisition is overpriced. You say nothing. The deal closes. The bank collects $12 million in fees. 6 months later it underperforms, and you do not feel guilty. You feel like you finally understand the rules. You stand at the glass and look down at a city that runs on decisions like the one you just made. You have traded something away for this seat. You can no longer remember what it was. You only know it is gone and that it is not coming back. You fly to Houston. You fly to London. You eat expensive dinners with people who decide things. What matters in this industry is almost never said in a room full of people. It is said in the car, on the way to the airport, by the one person who already knows how it ends. You watch a managing director get quietly pushed out at 58, 30 years at the firm, replaced in a week. Loyalty here runs in one direction only, up and never back down. You promise yourself you will never be the one standing still. Director, the pivot. You stop being the one who executes the deal and start being the one who brings it in. You originate your first mandate, a $600 million sell side. The fee is roughly $12 million. You keep none of it. It hits your division's profit and loss. but your name is finally on the engagement letter. Dubai, Singapore, a meeting you fly 11 hours for and leave the same night. You are learning what leverage actually feels like, and it is quieter than you expected. You do not ask for the deal. You become the obvious person to call when the deal appears. You have stopped checking your bonus number against your peers. You check it against the men 2 floors up. The gap is enormous, and for the first time you can see exactly how to close it. It is not skill, it is relationships. And relationships, unlike models, compound. You run the room now, not the spreadsheet. The analyst you once were sits silent at the far end, taking notes on you. You negotiate the fee. You set the timeline. The client watches your face, not the numbers. You have become the product the bank actually sells. You make MD. You're no longer paid for your hours. You're paid for who picks up when you call. You protect 2 relationships above everything else. They are not friendships. They're leverage structures wearing the shape of friendship. You know it. They know it. No one ever says it out loud. You structure a $3.8 billion leverage buyout and close it in 90 days. You collect 2% before the ink is dry, and then you move on to the next one. A sovereign fund in Abu Dhabi picks up on the second ring. That is what this level means. That is what access looks like. You are close enough to the flow of information that your instincts are structurally different from everyone else's. It is not illegal. It is asymmetric. You stopped apologizing for the difference a long time ago. Your fund's first vehicle closes, oversubscribed, sovereign money, a Canadian pension, family offices you will never meet. Individual deals feel small now. You have started thinking about the system itself and how few hands actually hold it. Now you run the machine. Head of the group, the name at the top of the league table. You do not pitch deals anymore. You decide which deals the bank will chase and which clients are worth the firm's balance sheet. $7 million a year, and most of it is no longer salary. It is a share of everything the floor below you produces. Every year, a third of the analysts wash out. You do not fire them, the system does. On the floor, you call it performance management. In the deck, it is a headcount line. Language at this altitude is insulation. It keeps the cost of a decision from ever reaching the one who made it. You sit on the committees that decide who makes MD and who is quietly moved out. You have not felt nervous before a deal in years. You're not sure if that is confidence or numbness. You always move on before the covenants start creating problems. You always do. A regulator opens an inquiry into one of your structures. Nothing is found. The process teaches you the real lesson. They study what already happened, and you're paid to see what is about to. By the time they read the file, you are 3 deals ahead. You leave the bank. You join a fund managing $12 billion in assets. You stop advising on deals and start deploying capital. You take control positions. You sit on 6 boards. Your carry will be worth between $40 and $90 million if the fund performs. You have stopped thinking about salary. You buy a healthcare platform leveraged at 65%. You structure it so the management team absorbs the downside and the fund captures the upside. It is legal. It is normal. The company will cut 800 jobs in 18 months, and you will read about it in a summary, 2 layers removed on a Tuesday. You have started thinking about the system itself, not the individual deals. The deals feel small now. You're not an investor anymore. Not exactly. You're not sure what word fits. You only know you're not going back. You have a direct line to 2 finance ministers and a central bank governor, as a peer, not a supplicant. You do not lobby. You do not need to. You're already standing inside the room where the rules get written. There is a level above the market. You do not trade it. You shape it. You sit on the board of a sovereign wealth fund. You set allocation mandates. You decide which countries receive capital. When your fund moves, secondary effects ripple across markets before you finish the press release. You're the press release. Your name is on a trust. The trust owns a holding company. The holding company owns positions in 17 institutions across 9 jurisdictions, most of them through offshore vehicles you will never list. You are technically a private individual. You have not placed a trade yourself in 11 years. You make decisions. Others execute. Privacy, trust, freedom, the people you knew before. These are not things you lost along the way. They are things you exchanged, knowingly, one at a time for altitude. You are not happy. You are not unhappy. Those categories dissolve somewhere back around managing director. Somewhere far below, a 23-year-old walks into a glass lobby for the first time. He logs into his Bloomberg terminal and sits very still for a moment. He thinks this is about the money. He is already wrong. It was never about the money. It was about the architecture underneath. The machine does not stop. It simply finds new people to run it.